I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the news and data you need ahead of the Wall Street Open. Coming up, US stocks muted after the S&P 500 closed at a record high. Can the momentum continue to build? That's the question. The House of Mouse, Disney shares seen rising on a dividend boost, and also the entertainment company's $3 billion share buyback plan. Watching the payment space, PayPal, well, shares look set to slide at the cash open after the company forecast flat growth below analyst estimates. Now, very warm welcome to you to this edition of Beat the Street. Not long now before Wall Street starts trading, we do have some breaking news trickling out as we speak. Initial jobless claims. This is for the week ending 3rd of February. Expected 220,000. We got 218,000. So pretty much bang in line. Also, the continued jobless claimants as well. That's another key one to look out for. Also, bang in line with expectations, 1.87 thereabouts. So pretty much in line with estimates there. Just looking to see whether there's been any move at all. Not any move really to report. I mean, this is the hourly chart, but I can tell you that we've not seen much of a move since that data point, as you can see there. Let's check on the dollar for you as well. This is the US dollar basket coming through, and a similar picture there. Not a huge amount of, well, no reaction whatsoever, because that came in pretty much in line with expectations. What is key, though, for the markets and also for the dollar, of course, will be what sort of comments we get from policymakers. We're looking out for Fed President Thomas Barkin, scheduled to appear on Bloomberg TV from Richmond. Also, he's expected to speak in New York sometime before then at the Economic Club. Now, among pre-market movers, I just want to take you through some of the big ones. Pulling up Walt Disney for you here because it's all sessions. And as you can see here on the hourly chart, look at that reaction there. It is rising all sessions after the media giant hit back at activist investors with a profit that beat the street, with a gaming investment as well. And says it plans to launch an ESPN streaming service next year. To add to that, the company also added to its share repurchase, announced a $3 billion share repurchase plan and a 50% increase in its dividend. Now, the earnings, whilst that was better than expected, revenues, though, missed expectations, coming in at $23.5 billion. Streaming service also in focus because it shed 1.3 million subscribers, nearly double the loss expected by analysts. However, it has to be said that this $3 billion share repurchase program and that raised dividend of 45 cents really catching investors' imagination. Disney also entering the world of gaming, as I mentioned earlier, by taking a $1.5 billion stake. That's $1.5 billion in Epic Games to develop a new Disney universe where consumers will be able to interact with characters and stories from not just the Disney universe, but also Pixar, Marvel, Star Wars, and Avatar. For those of you that follow the stock, you'll know that Walt Disney has been making inroads into what they call augmented reality. They've been trying out the Magic Bench. If you've seen that online, do have a look at that too, because it's quite fascinating how they're trying to get consumers to interact without a headset interface. Just looking at the shares for you, as you can see here, Walt Disney just panning out, has had a tumultuous time, especially when it was hit by COVID and its resorts had to close. Then it managed to make a bit of a comeback. And as you can see here, it's started grinding lower there before hitting a support level of 79.10. And since then, we've seen a double top, if you like, if I draw that for you. Now, a double top is a tentative indication of an upward trend. But if we see a third touching of that line that I've just drawn there, then that would validate that upward trend. Disney currently looking like this on the hourly chart and looking set to open slightly higher. PayPal, another stock that we are watching for you for moves, because PayPal is all sessions. And look at this chart here. We can see a strong move lower after that disappointing forecast. The company expecting adjusted earnings per share of $5.10 for 2024, unchanged from a year earlier. Also, no outlook for revenues and operating margins. Now, that eclipsed better than forecast earnings and sales for Q4. PayPal posted a Q4 adjusted profit of $1.48. Analysts on average had expected $1.36. Revenues also rose 9% to $8 billion in the quarter on a currency neutral basis, also beating expectations there. Just looking at the chart here, indicated lower on the cash open, but you can trade that now all sessions. But looking at a wider view, giving you the daily chart here, you can see that PayPal has had a sort of a rough head and shoulders. It's just broken through that line here. I might add that the blue, which is the 100-day moving average. So perhaps we could see a breakout there, but pay attention to the cash open because it is currently looking like it is going to have a fall. Philip Morris says it sees its first quarter profit largely below estimates. Now, this is as costs really start to weigh on the company. The company, which makes tobacco, non-tobacco products as well, said that its heated tobacco product sales disappointed. Fresh blows to its margins also emerged in Q4. This is as the company was hit by higher costs in not just marketing and tobacco leaves, but also administrative expenses, it said. Shares of Philip Morris, just bring that up. It's not all sessions, but you can trade it when the cash session starts. Philip Morris on the platform for you looks like this, and its shares elsewhere indicated lower, but you can see that on our chart here on the IG platform, it has had quite a tumultuous ride. Prepare for perhaps some more volatility. If you're looking at the three lines here, they are looking like they're starting to converge. And when that happens, and if we see a rise in volumes, that could sometimes indicate higher volatility for this stock. To oil now, and this has been a really interesting space for us because oil has extended gains after Israel rejected a ceasefire offer from Hamas. A weaker dollar also supporting prices. According to ING analysts in a note, they said that the strength in refinery margins should provide some support to crude by driving stronger demand as refineries look to boost run rates and take advantage of stronger margins. For a closer look in terms of the technicals as to where oil might go, Sean Morrison has the details.
The price of Brent crude remains in a broad range-bound trading environment. When we look in the very short-term problems in the Middle East, supply concerns has seen a bit of a rally of support. We've seen a bullish intraday reversal of that $76 per barrel mark. And that reversal has been accompanied by a move out of oversold territory. And so that is suggesting some further gains. We do have an initial target there sitting in somewhere between $80.60 to about $81.40. That dollars per barrel on that. I think traders who are long might consider keeping a relatively tight stop, trailing it between a 1 or 2 day low relative to their threshold for risk.
Thanks very much, Sean. And before we go, a last look at how the market is looking, muted, open, indicated. Let's have a look at the US 500, given it hit fresh records again to see whether the melt up is currently in play. And it looks like it is slowly trickling higher. Let's have a look at the hourly chart for you. This was the close yesterday on the IG platform. However, we are seeing a reversal pattern here as we edge closer to the open. That's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.